sector sentiment overall, as well as with respect to the earnings as well. What is that something that we should make out of the IT pack? To discuss all of that, let me welcome Sandip Agarwal, Fund Manager of Sowilo Investment Managers. As well. Sandeep, firstly, help us try to understand that what does this 2% workforce cut really means for TCS in coming at a time where the earnings are not that supportive. Is this 2% number really worrisome?
Hi, good morning and thanks for having me on the show. So, I will not go by the percentage because 2% doesn't seem to be big, but the real challenge, and we have discussed this in earlier interactions also, that because of the GenAI and agentic AI, the disruption which is happening, the amount of effort is going down substantially. Now, obviously, there will be also some realization increase, but that realization increase is not sufficient enough to cover the decline in the effort, which means that, revenue growth will be challenging. And also, this challenge is more in the middle and senior level where, this new people who were in project management side or they were managing people, because that is where you have the maximum cost setting and you are not able to redeploy those people. And I think what TCS has done and announced is the right thing to do. This may be painful for short term, but in long term, I think this is going to make the change, because if you see, whenever we have seen in NASDAQ component companies in the past, whenever there was challenge in growth or technology or regulatory, those stocks used to come down to reflect the earnings growth. In India, unfortunately, right now, what we are seeing, the PEG ratios in IT sectors are very, very high. They are not at all representing the real value of the sector. So I would say that this is a good step, right step, some pain in near term, and it will hurt mostly the people who are more than 3-4 years in the organization, because their technology skills may not have been upgraded to the level required.
Right. The point is that globally also, this is pretty much the same trend, right? Intel has managed to, has announced to cut about 24,000 jobs. That's as sizable as 15 to 20% of their workforce. Similar is the case with the Microsoft, Meta, IBM has laid off around 8,000 workers as well. So it seems like pretty much a global phenomena, and I don't think it would be right to just single out TCS.
No, absolutely, you are right, and that's what I was saying, that this new technology is disruptive and it means much lesser effort. So because we run outsourcing business, you cannot hire people just in time like the global tech. So the problem for us is that we always have a bench, and that's the reason the cuttings are not on the time, or the realignments are not just in time. Good thing that TCS has taken this call, and I believe that this will definitely improve. They allow them to realign, allow them to invest in better technologies and more future technologies. And I think all the companies will follow suit, and you will see similar announcements happening in next 6 months, as Rahul mentioned.
But I think, Sandeep, the other question also is that, sure enough, there's a business transition and disruption which is at play, not just at India, but a global level as well. How much of this is already in the price?
I think, if you see the PEG ratio, I think that is the most relevant ratio. If you see the price earning multiple, they may look reasonably priced, but I think PEG ratios are still showing that the stocks are very, very expensive across the board. And I think either time correction of couple of years or price correction of 15-20% will make them in a position where, you can justify the PEG ratios. I think that the stocks are still very, very expensive, and disruption has just started. There will be some impact for next few quarters at least.
The TCS firing that we've heard recently, and the 2% workforce that they are going to be letting go of, and that's the experts' take on that. Sandeep and Rahul, thanks so much for joining us. On that note, we'll let you go.